One of the biggest mistakes I see new traders make is chasing that big move. Now, I know what you might be thinking, Akil, how can shooting for a big move be a bad thing? Well, here's the issue. When traders focus only on the big reward, they forget about protecting themselves on the back end. And that often leads to unnecessary losses, and in some cases, massive unnecessary losses when the market doesn't go their way. In today's video, we're gonna break down how to strike the right balance between being aggressive while still managing your risk and protecting yourself on the back end. That way you're not overexposed if things go wrong. But you can also still take advantage of those potentially massive moves when they do play out. Now, before we hop in, today's footage was taken from today's live trading room session. This is something we do on a daily basis over on the platform. If you ever want to join, just head over to www.tier1trading.com and check it out. The one thing I would say is if you're aggressive, if you're aggressively looking for a long, you can load up a position here. We had a really nice combination here on the 15. You guys see this? Look at this. My gosh. Tweezer bottoms. The second one was a higher high, higher close. If you're looking to load up a position for a breakout, right? Remember, we talked about there's three ways to break out: before, during, after. Before would be establishing a position right here. Higher high, higher close was a good entry. What's our ATR? Let's move some stops on. This is the 15-minute chart. Let's move some stops on here. ATR is 4. Ooh. The low is 138.40. Excuse me. So 36 would be a stop loss right here. You could load up a position looking for A, a move across the channel, and then B, here's the big one. We do have some Canadian, a little bit of Canadian news coming out today as well. B, the big one would be a move. Back up to this area. Anywhere in here. Not a bad move, right? So if you are an aggressive trader, who likes to trade the breakout but build a position before the breakout happens in anticipation of the breakout, that would be the move. You can also look for if we get one more retest of this level. Risky, yes, because you have zero confirmation of a breakout. But if it works out in your favor, is 8-to-1 risk reward? You guys like that? Anyone like that? 8-to-1? So that's the risk reward of this trade. Something that you can consider doing if you're someone. This is kind of like we talked about in the CTS system. Is you can, and this would be probably for more experienced traders, you can play around with your risk profile, right? So we talk about sometimes position sizing in the CTS checklist, right? We talk about position sizing based off the quality of trade, right? So we talk about the CTS, the general scale is from 1 to 13. So we talk about, hey, if you have a score from 0 to 3, that equals no trade. If you have a score from, again, you can customize this for whatever you want, just using a general kind of deal here. If you have a score from 4 to 8, that equals maybe half, or 4 to 7, it usually is. 4 to 7 equals half size, half position, and then 7 and above would equal full position, right? Greater than 7 equals full position, right? So you could look at this in a similar fashion where it's like, man, Akil, taking this aggressive breakout is a very aggressive decision. As you mentioned, I have no proof or reasoning to believe, aside from our initial break right here, that price is likely to continue higher. But if price were to continue higher, then there's a great risk reward here. So what do you think a solution would be? A compromise perhaps would be for an experienced trader. New traders, just stick to your rules and just don't worry about any fancy stuff until you get better. But what do you think a good compromise or method would be in this scenario if you want to get exposure to this position, but you're a little bit concerned about the riskiness of it? I kind of gave you the answer already, but think about it. What is something you can do? Yeah, trade a smaller position size, right? If you usually risk 2%, risk 1%. If you usually risk 2%, risk 0.5%, right? Give yourself exposure to this potential, but limit your risk. Therefore, if it are you guys usually getting 8 to 1? Anybody usually getting 8 to 1 on average? No, I'll answer that for you. Probably not, right? I know there are some people out there that do it or claim they do it, but I don't think any of you guys are getting 8 to 1 on average, right? So 8 to 1 on average is probably double, if not quadruple, your normal risk reward. So if you were to trade a half size, right? One, you're limiting your risk. It's more risky, so you want to be more cautious. If it doesn't work out, you lose a little bit, but you lose less than what you would normally lose. If you're using correct money management and position sizing, one, a loss shouldn't hurt you in the first place. So a half loss should hurt you even less. It should be like a little tickle on the arm, like a mosquito, right? That bits you. I'm looking at all my mosquito bumps right now, right? They've been getting me. I got that sweet blood. But it shouldn't hurt you that much. However, what you've given yourself is you've given yourself exposure to a big potential win. And even if you win with a half size, you're kind of winning more than what you normally would be because the targets are so far away. So something to consider as you take your trading to the next level. Again, if you're a newer trader, don't worry about doing anything fancy, right? Very strict rules, trade those rules, master those rules, become comfortable with those rules. But for you guys who are comfortable in your trading strategy, for you guys that are experimenting with alternative approaches, for you guys that are looking at opportunities where you're like, man, I would love to I want to add a home run trade to my arsenal. I would love to get involved, but I'm not quite there because I don't think it's worth the risk and I'm very risk averse. This is a nice little compromise. You can have the best of both worlds. You can have a seat at the table. You have a chip, you have a chair. You can play the game. You can be in a position where you can get a home run trade, but you're protecting yourself on the back end. I just listened to the accountability sessions the other day, and I forgot who was. I don't know if it was Kurt or Russ. I think one of them was talking about home run trades, and it made me think about this. So that's a good method that you guys can try out if you want to. But decent opportunity here on Canada if you're aggressive. Again, the more conservative approach, right, is like we always talk about. Just as we saw here, wait for the confirmed break of this move. Wait for the pullback, right? If you're a pullback trader, and then look for that next move up. Any questions about that? This is how you slowly progress as a trader, right? We talked about this the other day. I think I did a podcast episode on it as well as my very slow progression as a trader from like me trading one thing. I think Omi was asking questions about that. Me trading one thing, then over the years slowly growing. This is how you slowly grow. You look at this, you say, Akil, I like this idea. You go back, you test it. And then if it meets your standards, now it's boom, something else you've added to your arsenal that you can take advantage of if the situation is right. If the situation is right. All right. Sideways shuffle here on Aussie, right? Wounded crab. Wounded crab, right? We're putting in lows. Blah. We're putting in highs. Blah. We'll break out one way or another. Now, unlike the Canada one, I don't have a bias on the breakout for this one. On Canada, I have a little bit more of a bullish directional bias. This one, I don't have a bias. I have nothing really saying that we're more likely to break upwards or downwards. So this is one where I wouldn't be aggressive and say like, hey, establish a position at the top or the bottom, because I don't know. So do you see the difference in there? With Canada, we had a bias. So we can be like, okay, I can be a little bit more aggressive because my analysis says this and this is lining up with that. This one, it's a big, I don't know. So we don't want to be super aggressive when we don't have a directional bias. Yeah, high and tight flag. Good spot. Hope you enjoyed the video. If you have any questions, comments, or video ideas, leave them below. And one last warning, this Thursday, August 28th, we're gonna be hosting a 3-hour online trading workshop. We actually expanded the seating this weekend because we filled it up and people started complaining. So register now because we will not be expanding it again. Look forward to seeing you guys there. And before you leave, hit that like button, subscribe. That way you don't miss my next upload. All right, see ya.